Hello, investors. It's Don Vandenbord, Chief Investment Officer with Revere Asset Management. Today is Monday, July 8th, 4:46 p.m. Eastern Time. Coming to you from St. Augustine Beach, Florida with the Revere Roundup Daily Market Insight video. Market state, we're in an uptrend since May 6th. Check the trend gauge over here. We've got the four green arrows. Mid and small caps still struggling against their short-term 21-day and medium-term 50-day moving average, although small caps did make a run today at those two levels. We'll take a look at the charts momentarily. So, and leaders, fine, we got a new 21 over 21 list. We'll review that as well. All five of the major indexes trending above their long-term 200-day moving average. That's the magic line in the sand for presence or absence of the risk of a bear market. They all occur under the 200-day moving average. We're above there. It relieves a lot of angst as far as markets just scare the bejesus out of some people. If you're above the 200-day moving average, for the most part, things are going pretty well. So what happened today? Four straight all-time high for the S&P 500 and NASDAQ-100, not led by big tech today. However, some rotation going on, and mid and small caps actually with the best returns. Here are the numbers of 21 over 21, up an average of 0.5%, 12 up, 9 down. The big eight resting down 0.13%. The RG8 up 0.5%. That's our 8 growth ETF composite that we track every day. S&P 500 opened up about 0.1%, closed up about 0.1%. Tight range chop today. Equal weight, double the return, up 0.20. We need to see more of that. And if we get some digestion in the big eight, we will see more of that if they can pick up the slack and the rotating funds. NASDAQ 100, 0.25%, equal weight, just barely negative. Dow down 0.1%, mid caps up 0.4, Russell 2000 small caps up 0.6. Global 60/40 essentially flat. Our flagship GROTECTION portfolio down a little less than 0.1% on the day. Let's get to the charts. We'll start off with the S&P 500. You can see the undercut reclaim 5 days ago at the 8 EMA led to a nice 4-day rally. Getting a bit extended. If you look at the numbers here, 4.7% above the 50-day moving average for the S&P 500. 5% is considered extended, and we'll look for pullbacks when that happens. NASDAQ 100 up 8.2% as that continues to look great. Relative strength near a new high, supporting price. And we've been staying extended. Back here before the last pullback, we got 8.8% above the 50-day. Even after a 3-day pullback, we were still 5.6% above. And then we've gone on this run the last 2 weeks and extended again. So looking for some rotation into other sectors out of those big eight stocks. But those are the easiest way for big money managers and hedge fund managers to make gains is by sticking with them. We'll see if the earnings season kicks off the end of this week. We'll see in the upcoming weeks how those impact earnings. Here's the Dow. Opened up 0.4%, negative reversal to close slightly lower, but still above all moving averages. S&P 400 mid cap. Still can't get above this declining 21-day moving average. You can see very clearly this declining tops trend line that we're keeping an eye on. Everybody sees this, however, so wouldn't be surprised to see a fake breakout and back in again. But we've had several fake breakouts on this, so maybe you take a contrary opinion and say everybody thinks it's going to fail. This time it works. That's what's so exciting about the markets, so challenging about the markets. No 2 days are ever the same. Let's go to the Russell 2000. If I could type the right, there it is. All right, so above the 50-day and failed today. Did close above the 21-day. That 21-day has been acting as resistance with occasional single-day closes above, and you've got that declining tops trend line here too. You really want to see a clear breakaway of that to get any confidence whatsoever. We've got rising or higher lows that we're making here, also turning that into a triangle, unlike the flat, consistent lows that we've been seeing with mid cap. So A little bit of outperformance there, but only versus mid caps. You can see the relative strength line still not doing very well. Let's take a look at the equal weight S&P 500 RSP. This is something we're keeping an eye on as a place to possibly see some outperformance. If we can get above this 50-day and 21-day moving average, you can see how tight we've been trading there, and serious underperformance versus the market cap version. It doesn't go on forever. There are times when it outperforms, and those times are when money's coming out of those big tech names and into some other names. And once again, the biggest catalyst on the horizon, well, we've got three this week. We've got Powell testimony to the Senate and House Tuesday and Wednesday. We've got CPI inflation data, that's consumer inflation data, on Thursday, and PPI on Friday. So it could be some market moves there. Right now, we're looking at better than average, about 70%-ish chance of a rate cut in September, but not in the July meeting that's on the horizon. So there's RSP, equal weight S&P 500, or sorry, NASDAQ-100 here. You can see it broke out. This is the type of breakout we're looking at. We're looking for the RSP to move out of this choppy range and start making some higher highs. So those are the major indexes. We'll start with the VIX. Tight down with a 12 handle below the 21-day moving average. It's been playing ping pong around that level, but stuck between 12 and 14 for a few weeks now, which supports a bullish environment, tight range bullish environment. US dollar up slightly today after 3 days down, and looks like 4 out of 5 days down. How did that impact the metals? Gold pulled back after 2 gaps higher, down 1.24%. Gold stocks closed at the top of the range after 2 gaps higher, down 0.5%. And silver, which we own in-house, pulling back, closing mid-range after 2 gaps higher, down 1.2%. Bitcoin not able to get out of its own way. Outside day closed basically unchanged, broke below the bottom of this range at this 3220-ish level, spending 2 days down around that level. Needs to move higher off of this level to have any confidence that a bottom is being put in. Bond index, broad bond index BND, basically unchanged today. In fact, looking exactly unchanged. Tight range today. TLT unchanged most of the day, a little higher by the end of the day, up 0.22%. Price up means yields down. Yield down here on TYX and also on TNX. Both yields lower. That's our inter-asset correlation. Let's go to the tail of the tape. You can pause this. I'll hit the highlights. I mentioned the news this week that could move the market. 4th day up. 5th close above the 8-day exponential moving average. 25th above the 21 all-time high closes, as I mentioned. Not a lot of standouts in sectors today. Semiconductors and biotech stood out to the upside. To the downside, commodities, oils, gold, gold and silver stocks, uranium, copper, and XLC as Meta and Google took a break today. Some portfolio changes. We got shaken out of CORZ early in the morning. It made a comeback, but your stops are your stops. You obey them. NRGU, after 2 days down, we stopped out of the rest of that and the remainder of Abercrombie and Fitch. After our weekend sector review showed 0 stocks in that sector above the 21-day moving average. So the sector is facing headwinds. Abercrombie bounced back above the 21 today, but it was on very light volume. And it's right around the 8 EMA, but we pulled the plug on it. Just really not showing the strength that we wanted to when we bought it after fading late last week. On the upside, SMCI data center, AI data center names had a good day. We re-entered SMCI. We got stopped at 927 a few weeks back and re-entered at 900. That's how, when things go according to script, that's what you like to see. It doesn't always go that way when we stop on something that we can get back in lower, but we're all about the best low risk setup. And we added to Kava today, although it pulled back later in the afternoon. So that raised our adjusted beta from 1.36 to 1.41. With a reminder, the S&P 500 is considered 1.00. And bottom line on the day, 4 straight all-time highs for S&P 500 and NASDAQ-100 in a tight range summer trading day, mid caps and small caps led. Let's get to this week's 21 over 21 list, and we're going to sort these and go by how biggest gainers on the day to biggest losers. We'll start off with SMCI. You can see this break of this kind of declining tops trend line and finding support at 3 moving averages, the 8, the 21, and the 50, and moving up off of there. And it had volume right out of the gate today. This is just a low risk entry. And it looks similar to this one. We don't want to see that have the same result when we pulled back last time and then had a bit of a change in character, blasting above the 21, but then it just went sideways for another move down. We saw a similar move again. We played this one and it ran for a while, ran into the 1,000 level, had a really hard reversal, and that's when we got out at 927. That time it continued lower, breaking the moving averages. Shakeout this day, and now regaining the moving averages with some volume. So we'll see if it can get anything going there. It did have VRT was up, VST was up, Dell was up. So it did have cooperation from other names in the sector today. All right, next up, Coherent continues to make all-time highs. ARM Holdings, another all-time high. NVIDIA, off the highs of the day, but still up nearly 2%. Palantir trying to break out of this base. Maybe this was the handle. We're looking for more of digestion here after bouncing straight up over the last 2 weeks. Dutch Brothers continues to rock and roll. ELF hanging right around this 200 level and the 21-day moving average, which is flattening about, not getting any strength. This is kind of similar to the way Abercrombie and Fitch is acting. It shows some promise, goes sideways, fades. We'll see if it can get moving or not. Apple continues just on a rampage since its earnings report. Just great stuff there since it broke out above 200. Tesla, range expanded today, sold off early. Then it got made higher highs, pulled back near that 250 level by the end of the day. Lilly, tight range day. Uber, very tight for 3-4 weeks now. We're looking for some power off of there. It tried to move out a couple of times over the last couple of weeks, but just couldn't do it. You can see the flattening relative strength line there. CrowdStrike, gapped up. Weird day on this one today. Gapped up and then sold off hard on big volume. And we're like, what the heck is going on there? But undercut and reclaim of the 8-day moving average, and very similar, very close to the 21-day moving average. Ended up really salvaging a pretty good day. Volume by the end of the day, pretty light, down 42% versus average. Pinterest is the one that keeps trying to get punted off the list, but keeps holding on there, riding that 21 higher ever so slightly, but not showing any relative strength. This one has gotten a stay of execution over the last couple of weeks, but still on the list. Kava, you can see the move higher before reversing in the afternoon. Amazon hitting resistance at this 200 level. GDX added. We own SLV, but we wanted to go a little bit broader on what was in the 21-21 list. So after the 2 gaps up on gold and silver stocks last week, we put GDX on with a positive close today, despite being lower. Spotify is another one that has tried to come off the list, really not going anywhere. Relative strength kind of lagging, but we want to stay diverse in our groups here. We can't put all software stocks on, or we can't put all semiconductor stocks on, but this kind of is a niche company, and we want to stay on and give it a chance if it's going to move. But honestly, kind of disappointing since its earnings gap up and attempted breakout a couple of weeks ago. Datadog pulling back, but bounced right where you want it to at the 8-day moving average after a nice move up last week. AppLovin, failed breakout, falling through to the downside today, but undercutting and reclaiming the 8-day moving average by the end of the day. Meta, after a big day on Friday, pulling back on lower volume. This is the type of volume pattern you want to see when you're down 2%. on the day after a big up day. And finally, Transmedics clearing 150, pulling back right to the 8-day moving average today. And that's the 21 over 21 leaders list for this week. As always, we love to hear from you. The email is don@revereasset.com. If you're interested in becoming a client, my partner, Dan Stewart, can be reached at dan@revereasset.com, or the phone is 855-REAL-WEALTH. That's 855-732-5932. We're in a very bullish phase in the market. Ask yourself, if your money's being managed by another advisor, what's your advisor going to do when this uptrend inevitably ends and you pull back? Are we going to pull back 10%, 15%, or are we going to pull back 28% like we did in 2002 during that most recent bear market? We don't know, but we're prepped for anything. Very data driven here at Revere. We know how a healthy market looks, and we know how a risky market looks. Right now, it's healthy, but bull markets make geniuses out of everybody that's participating in it. It's two separate skills: is making the money and keeping the money. Two very different skills. We're adept at both of them. We think it's a common sense approach. If you're interested in learning more, reach out to us. And with that, I'll wrap it up for Monday, July 8th. Head for Tuesday tomorrow on the video. I'll be back Wednesday, Connor on Thursday, and then I'll wrap up the week on Friday. Thanks for listening and have a great day.